Hello guys, welcome back to Raven Rock channel. So today we're going to talk about a little bit of the Bretton Woods System. So a lot of people been heard of this financial system, but most of the people don't really understand the meaning of this Bretton Woods System. To be simplified, our current international trade system was built on different international standard. To be able think about our daily life right now. You'll be able to pay online with dollar, and you'll be able to exchange your currency to another currency. You'll be able to purchase a good from different country, and you'll be able to communicate with the guy from the other country. Well, back then, 100 years ago, maybe perhaps 50 years ago, it would be a much difficult process to do so. If you would like to trade in other nation, in other country, you will first spend enormous time travel from one spot to another spot, and you will have to pay enormous cost, and you will also bear a lot of risk when traveling. When you don't really have a lot of you don't have planes, you don't really have you can only travel there by boat or maybe by train. Very long distance train. So that to be said, it used to be a very difficult process to trade internationally. And when Britain come in, the British Empire built a foundation of that international trade system, because British Empire was so strong and powerful that the government, Elizabeth, and the British government established different colonies in different areas, such as South America, Australia, and so on. So it built a network, and it was kind of the basic facility of our international trade system. But after the World War I and World War II, we are urging for another international trade system and also a currency system. We need to understand what currency we're going to trade. We're going to understand what kind of standard we're going to follow, and we're going to build a structure that can be rely and to be used for another, couple, maybe 10 to 20 years, maybe 30 years. So that is the reason why we have the Bretton Woods System. So the Bretton Woods System was built to introduce the dominance of dollar, and also this is the result that was directly originated from the 1944 Bretton Woods Conference. With that conference, basically you're seeing two of the most powerful countries at that time. We're talking about UK, and also we're talking about United States of America. They were sending two of their best economists. The U.S. government sent Mr. White, and also British government sent the best economist, an economic giant, Mr. Keynes. And Keynes, he proposed for a very different standard from today's view, because what Mr. Keynes he was proposing was rather different. He wasn't proposing a go-back system. He was proposing another different system. So naturally, essentially speaking, Bretton Woods system was built and designed to be a gold standard system. What does that mean? That means because we are printing those currency, and we have to understand, if you're printing currency, there should be some collaterals, there should be some valuable items that is giving all these currency value. So gold would be a very good commodity that everyone's admitting its own value. So that's why we're seeing gold as an international standard for currency. That's why U.S. was pegged with the gold bullion, was being pegged with the U.S. gold reserve. That means if anyone would like to exchange dollar to gold, they'd be able to facilitated through the US because they believe that the US government and also its fiscal ability and strength is capable of exchanging that amount of gold bullion back to its own currency holder. So that's why people believing US government that if one day I would like to change my dollar to gold, the US government would definitely do that for me, and they will set the price at $35 per ounce. So that means the Bretton Woods system is a gold-backed currency system that was introducing a 1 ounce of gold equals $35 of value. So that gives the US dollar bill a certain value. And also, but at that time, other currency, we're talking about German marks, we're talking about different currencies, they're also fixed. They have a fixed currency exchange rate, which is pegged with the US dollar. So it was a rather fixed system. So whether you travel abroad, you will always see different currencies. You are not going to see that exchange rate going higher and going lower, which is very different from today. Because today, as you can see from the economic news from Bloomberg, you're always seeing the devaluing of yen. Sometimes you see the rubles coming back. Sometimes you see the currency go down, B currency go up. And you see when Fed is raising interest rate, all these currencies have very different reaction. But back then, the currency value was rather different because those currency value tend to have a very fixed value related to the dollar. So that's why you have a very fixed system, which doesn't change at all. That will also could be considered as one of the main loophole of Bretton Woods system, because the Bretton Woods system is a go-back system that was fixed, and there is not much place to, I would say, to be altered, or to be not much space for buffering those financial risk. That's the reason why the Bretton Woods very quickly after a couple years was being that Bretton Woods system was being basically collapsed. So during that era, the Bretton Woods system, with the introducing of Bretton Woods system, there were two main products. There were the World Bank and also the International Monetary Fund. That means if today you want to do business internationally, you want to expand your business, or maybe as a country, you would like to have, you would like to facilitate additional fund or additional loan, you can have all your request sent to IMF, and you'll be able, with given some conditions, you'll be able to have some certain loans, maybe the dollar loans from other countries, maybe other countries buying your bonds, you'll be able to develop your country's economic system. So IMF was basically the very important facility, which is a direct product of the Bretton Woods system. Also, there is also another very important organization being built, which is the World Bank. The World Bank, however, is more of like an academic and economic organization that its main responsibility is to provide most of the very important statistics, economic statistics, so scholars and policymakers could make decisions and make very important judgments out of these economic statistics. So these are very important product of Bretton Woods system, and today, up to now, these two systems still coexist. Okay, so however, the Bretton Woods system has its own good days, because the economy was the world economy system was rather in a rather stable manner, and everything and economy grew rapidly. But until then, we start seeing some basic loopholes of Bretton Woods system, because that with the go back system, it's not big enough. If you want a truly globalized economy, you don't really end up having enough dollar, because think about this: country A grows, its economy system grows up rapidly and it demands more dollar, and the country B, it was an emerging economy, and right now the country has developed rapidly and it also demands huge amount of dollar. So in this scenario, the US government would end up not having enough dollar to facilitate for their demand, and one day this go back system is deemed to collapse. So as we will be speaking of intensively in the next video, I'll be talking about how does Bretton Woods system end up collapsing, and what is the direct result of Bretton Woods system collapsing. I hope these